All right, gang. What's up? How's everybody doing? How is everybody doing tonight? Sorry, I was a little bit behind. I was contending with two cats here. Let me make sure my screen is up and fitting and everything correctly. I hope you guys had a great day today. I hope you guys didn't get, too. I hope you guys didn't mess yourselves up. There was a lot of opportunity. As far as the overall markets, the volume was really low. I don't know if you guys noticed that or not. So what I do is I will look at the market internals in the morning. I have my checklist that I go through, and that's rates, dollar, overall market, all the indices. So again, welcome. If you're new, this is the Ivy League live stream. I'm Justin. We're going to go over charts. We're going to go over some news today. If you could, like, share, comment, subscribe, post your tickers in the chat if you guys have any questions. We're going to take questions. All right. If you have any questions about trading, about anything in general, post it in the chat. Again, if you could, like, share, and subscribe. So, like I was saying, we had a lot going on here. I got two pets that I've been managing that I gotta kind of keep separated, but it's all good. So again, I hope you guys had a great day. I had I don't know, about a break even, maybe a little red. Well, I traded Disney. That was my last trade. I was green on it, and I was looking for Disney to break the level, and we'll get into Disney. We're gonna get into everything. There was a lot of news, which is cool because I was a little worried that the market was going to be a little slow this week with all the data and Fed that we have next week. So I'm kind of curious whether we start to see positioning later this week or if we see positioning starting next week. Now, I was kind of wondering if we were going to have continuation today as far as what happened Thursday and Friday. So if you guys don't know, we trade live Monday through Friday. I come on about 7:30 a.m. till 4. We come up with a game plan right here, live on YouTube. Again, like, share, subscribe. That way you get notified every time I come on. Again, my goal is to help the retail trader who may not have the education, afford to get the education, and you can come right here. Again, you guys can ask any questions, tickers, anything about trading. Investing is a whole nother game. I'm not a financial advisor, so I can't really tell you suggest what you do with your money. All I can do is tell you what I'm doing with mine. Okay. And I've been managing my own capital for close to six years now. I've been through a couple different types of markets. No matter how long you do this for, there's always going to be different market cycles, and you got to be aware and know how to trade them. All right, this bear market has offered so much opportunity, and if you don't know how to trade it, you're going to find yourself like a lot of the other people, and you're going to find yourself hurt or your account's down. And so year to date, technically, the year to date, I don't know, the S&Ps are up 12, 13%, roughly in that area, 10, 12, 13, 14. Don't quote me. I don't know the number offhand, year to date. So technically, if your account is not up by that much, you are lagging the overall market, okay? And the market is the S&P, at least. The S&P is usually the gauge, okay? So if you have a fund manager who, let's just say, pulls in 8, 9, 10%, and the S&P is up 13, or we're going to say like 18, 20%, like it has a big year. That fund manager has not performed. Hasn't performed at all. So they're going to be asking, the investors are going to be asking them, I could have just put all my money in the S&P. You are a professional money manager and you couldn't beat the S&P. What's going on here? So you got to think about it like that. And with that brings me to this rally. We broke the psychological 420 level. We've had negative bullish divergence the whole way on the daily chart, which I'll bring up. Let me real quick I'm just going to put in the chat here. If you guys have any questions or anything, just put them in the chat. So let's take it to the daily chart, guys. Well, look, intraday. All right. So what did I do today? So I was like, I did not hardly position myself like to come out on the day thinking I was going to, it was going to be like a home run, a triple, a double hit, or a double hit, yeah, whatever type of day, base hit day. All right, base hit day. The volume was low. I knew we had data. Again, we had data at, what was it, 10 o'clock. We had ISM. ISM services. Now, if you guys don't know how to read these numbers, okay, your ISM, your S&P composite, like your Michigan numbers that come out on Fridays. So anything over a 50, okay, anything over a 50 is expansion. Anything under 50 is contraction. So you can see that we've been over. I can go through this, but look at your the forecast and then your previous. You were just break even. Okay, and if you go back, which we can, I'm not going to spend too much time on it, but look at this, 56, 54, 55, and we're all the way down here. This is contraction, guys and girls. What this means is you're starting to see these interest rates filter through the system. Now we start getting in negative territory, which it's not negative, but anything below 50, you're starting to see here things are slowing slowly, and I've been reiterating that. There was a piece out with the Wall Street Journal today, was talking about regulators wanting to raise capital requirements. Okay, if this does happen, that's going to take time. Okay, that's going to take time. First off, okay, let's say if it does happen, I think even by the time that this were to even come across anybody's desk, or this was to be put in place, you're already going to start to see a slow in between these interest rates. So if you want to figure out, this is not, again, financial advice, but a way you can look at this stuff is go back a year, go back 2 years, go back 6 months, go back 12 months, 18 months, whatever. Go see where Fed funds rate were, see what the difference is. Let's just say we've been doing this for about a year now. It's a little over a year. So maybe we're going to say 3.5. I'm just putting out a number. I have it written down in my notebook somewhere in all these pages. I got 3 notebooks, by the way. This is the stuff you got to do if you want to again, this is all also, I don't really stress on data because this is all backwards looking. All the data that we get is backwards looking. The market is forward looking. Okay, but it does give us a sense of, okay, so these interest rates are filtering through the system. Things are slowing, but slowly. Now we got to watch the rate of change on these data numbers, okay? I don't expect any of you to write them all down, but if you start seeing, things are slow now. Let's just say we get into July, August, September, and we start seeing, let's just say the ISM services. All right, we've already seen the prior data we got last week with back orders, new vehicle sales, like they're all slowing down. They're all dwindling. I have a delinquency thing up too I'm going to bring up. So this is all backward looking. Now, if you start to see this data speed up, that's when I want you guys to start talking about maybe the Fed's going to cut rates. Until then, the Fed's not cutting, and it may not be a problem. And I think that's one thing nobody's talking about is that maybe they don't wait for the problem, but if they start seeing the data just rapidly declining, maybe they do try to get ahead of it. Maybe they've learned from COVID going from one extreme to the other that they don't want to do that anymore. And maybe once this data shows a contraction that's starting to speed up rapidly, maybe they try and get their hands on it and grasp. Maybe they won't tell you that, but if you listen closely, they will tell the markets that in a way that you have to be able to decipher it. All right. So far since I've started this, we've been spot on with the markets. I was on last night telling you guys about crypto, and then we get news about the SEC and Binance. Like, it's funny how this stuff works. The charts tell you a lot, guys, and the chart will add up. If you add the time up, it's so funny. Those of you that have been in the markets long enough, you'll know that it's so weird how things work. It's funny how we also got to just under 430, and then Apple comes out with their thing, with their whatchamacallit. You guys know what I'm talking about, the Oculus thing that Apple has, and that thing's beautiful. That thing is rad. That thing is sick. It's sick. Now 3,500, $4,000 starting price. Market didn't really care for it. I don't think that the market. It's not that the market didn't care for it. I think there was a technical 430 hit on the S&P. The IWM sold off. We're going to get into the banks. As your regionals and your small cap. I was hoping we were going to get this healthy market pool with the IWM matching up with the Qs, the NASDAQ 100. Okay, you have a big separation between the two, and that is not a healthy market. All right, the market tells you the same story over and over, usually. Here was the Qs. We can go back. I do this over and over again because I want to reiterate the fact that, the Qs, the SPY, and even the Dow were making new highs. So let's just pull up the date here. The high was 408. We'll go to the high. 1119. That's 2021. Yes. So let's go to the IWM. 1119 we'll go to. 1119. Well, the IWM was already in its bear market. Okay. It did try to rally and meet up with the rest of the market, and it didn't. Look, all year flat. Literally all year. And this is risk. This is risk. This is not, Apple, Microsoft, Nvidia, and United Health, and JP Morgan. All right? This is not that. So this is a story. This was not making new highs. And when it tried, ensued the bear market. Okay? Quickly got rejected, and things got a little shaky. That's going on right now. Okay? So if we look at 2022... You started the year off good. You sold off because of the banking crisis. And look, we've been flat. And we tried. All right. We tried to get things going. But we broke the 100-day. I was looking for this 100-day to hold. It didn't. Dude, we sold off hard. I'm going to get into it. But real quick, I want to show you the difference. I could bring it up on a different chart. But or have two charts up at once. It's going to take a little time. I want to be quick. I want to get straight to the point here. So, look at the Qs. Look at the Qs. Just still rallying. Strong. AI. Tech. All right. Qs were beaten up. The Qs were beaten up. I will admit that. There were some good prices here. This is why you guys got to start buying when there's blood in the streets and not worry about, is it going to go down further? Is it going to go up? Now you're like, did I miss the bottom? Now you're wondering if you missed the bottom. Guys, if you're buying long term, the only thing I'm going to tell you, if you are going to, you're going to buy solid companies, if they're good prices, just grab them. And if you average yourself down, hell, even averaging up, if you're holding long term, you're not going to do yourself any disservice, I guess, by waiting to nobody, no fund manager, no professional money manager sits and thinks that they're going to call the bottom. What are they doing? They're averaging down. They're buying every dip that they get because they know if it's that bad, we're not going to be worried about money. Okay, we're going to get out of this. I mean, just go back to 2022 or 2021. Okay, are we better off or are we worse off than 2021? Ask yourself that question. Okay. My cat's coming over here to join us, so you might hear her purr. All right, so let's get into it. So we were pretty much flat. The Qs were up a little bit. SPY, I think, we finished up a little bit. I'll have to look, but I do know the Dow and the IWMs they got hit. What happened this morning? Because like I said earlier, I wanted to talk about the continuation from Thursday and Friday that we didn't get. Now, why do you think we didn't get that? Well, it could be because it's Monday. Maybe I was kind of thinking it was going to be a dull week, but I also think it was the NASDAQ the NYSE this morning, New York Stock Exchange. They had a mess up again. Look at these candles. Look at this. And I seen this. I looked away. I was writing down some notes. I was doing something. All right. And I seen this big wick. I'm like, we usually don't get misprints like this during the market hours. Okay. It's very, very rare. So I'll have to look up and go see exactly what the cause was. And I've seen this like 3-4 times. It rarely happens. Maybe once, maybe twice a year. You know, There was just one recently. It was just a certain sector of stocks, and what I was thinking was that maybe one of the market makers didn't show up, or they just weren't assigned that basket of stocks that that they make a market for. And I think that's what the problem was the last time we had it. It was like 6 months ago, 7 months ago, maybe. Like, it was, if you guys trade the markets, you may know. So we had this today, and I think that's why the volume was a little iffy. So if I bring up the 15-minute chart, I'm going to try and bring up like a 3-minute because it started like right at the bell pre-market. Like it started right at the bell. So if we go, let's try and see if I can bring a 1 minute here, and I'm on the SPY. And if you notice, the Qs it didn't really happen with the Qs. So what I want to show you is, let's see if I can go here, and I'm going to go here. Now, what I'm trying to figure out is, were we in a sense of a continuation at all? It doesn't look like it from here. Now, see, we already started the day off. If you look down here at this volume, if you guys can see my cursor, I'm not sure if you can or not. This is a 1 minute. So even just starting the day off, it was like we were already up at this 430 psychological level. So, if they're coming in selling. So keep that in mind. If you come to a psychological level and you're right at it, especially in the beginning of the week, just let things play out. All right, so that was I don't know if it was the NASDAQ or the NYSE. I want to assume it was the NYSE because the Qs weren't doing too bad. Like if I bring up a 1 minute chart of the Qs, they did not put in these ridiculous candles and tails that you see. You never see. You usually rarely see tails like this. You get all these tails, the market's already up. By this point, by 10 o'clock, 9:38, 9:40, the market's already putting in new highs because there's no way that they're just going to sit here and get all these tails just being balled up. If you're new and don't know what this tail is, okay, so if the market opens up here, so this is where the market opened up. If you see my cursor on this bar, this is the bottom of this bottom line of this bar is where where it opened on a 1 minute time frame. And this is where it closed. So what happened was it opens, it gets sold off, and what do we have here? This pink line is VWAP, volume weighted average price. Now this is a moving average that is used for buying and selling. You want to buy below and sell above. So you see this tail here. That means price action went down, but got bought back up. Okay, and you closed here. That's why there's a tail, because it went past the opening price. Now, if you close down here, this is going to be a full red candle like this. It's going to look like that. So anyway, like here, like look, open, close, open, close, open, close, open, close. So just in case somebody's new and doesn't know. So what I want to do is I want to go into what's going to help you guys. And we did this last week. All right, we did this last week. Putting the picture in your mind as the week goes on so you have an idea. So right now, this is the world. Now this is all U.S. equities. Let me get a sip of coffee. So now we see like South America is green. Okay, but majority is red. So what we want to do is, you see this like HBD, how it's 0.44. This is like, we'll just say 0.5%. It closed lower 0.5%, just under. So it's almost positive, or it's almost flat. So if you start to see these reds, see how it's dark red, 2.5%, 2.6%. All right. If you start to see all this red start to go to like this maroon color tomorrow, and then you come in Wednesday and it's starting to be this color green, then you're going to start seeing the shift. You're going to start seeing the shift from selling to buying, but you want to see it all over. Like we had it last week, was picture perfect. We called it last week to a T. We said Monday, we called it to a T. You'll have to go back. It's on the lives if you guys want to check it out. I mean, we were in the right stocks. We called the market to a T. We expected the market to go higher later in the week. It did. And what we do is we just read the chart. And this is also experience. You're not going to be able to do this. I wouldn't expect you to do it. Even putting in a year and a half, maybe your second year, and maybe you do it in a year and you're just that good. Maybe you just have something mentally wrong with you where you belong here in the markets. So we're going to go to the S&Ps. Now we'll go full. Now you can see there's a lot of red in here. You can see certain sectors are green. This was your leader last week. Consumer cyclical was your leader. Now it's starting to roll over a little red. Now, is this a pullback and they recover? Or is the IWM and the banking going to bring this market down? Because the breath is just, you're going to want to see the IWM tomorrow and Wednesday, what it does. If it took back today, or it took back Thursday and Friday by 11 o'clock this morning, it had almost given back all the gains from Friday. That's not good. That's not good. So you guys got to keep that in mind. Because the longer this gap between the NASDAQ 100 and the IWM goes on, the more the probabilities, the longer we go on, the probabilities you're going to hear more about banking. Something's going to happen. Something's going to happen. And look, what's all red? Banks, guys, banks. So again, like I said, there was a piece out on Wall Street Journal about regulators wanting to add a 20% on capital requirements for loans. Okay, so that also helps with them not wanting to lend. This policy is giving them all the reason in the world to not lend, or trying to make things a whole lot harder. And it's sometimes with, I know someone who just bought another home, and he was saying that the process was ridiculous. It was hell. All right, so there was another piece that leading to that. There was a Barclays piece that I don't have up here. I wonder if I go here, because it was here. There was a Barclays piece that said, or no, it was Deutsche Bank. Deutsche Bank came out and stated that a recession, the chances of a recession are going to be more towards policy recession than anything else. All right, the tightening of policy from lawmakers if they continue to go this. And I don't know if they came out with that because of this capital requirements that came out, but that could also lead to why the banks were red. All right, there may be news that I haven't seen yet, but that was my logical thing, or the fact that the IWM's just sold off. Nobody's buying because there's something looming there that that the smart money doesn't want to be a part of, guys. That's what that is. All right, I assure you, when it's time, you're going to see a lot of volume. Okay, let's go into it real quick. Before I forget, like, share, and subscribe. Just kidding, that wasn't it. But seriously, like, share, subscribe, comment. Put your comments in the chat. Ask me again any stock you want to go over, any trading questions you have, whatever. Put them in the chat. I'll get to them. So you have rebalancing on the IWM also, and I mentioned this last night, that every it's like the third week of June, I think. Don't quote me. It's either the third or fourth. I think it's like the 21st or something like that. It's the third week of June. The IWM gets rebalancing. Okay, are they waiting for that? Now, I think the list has been given, like the replacements, the ones, who's leaving, who's coming in. What's the weighting shift? Is nobody leaving? Is it staying the same? But the weighting is going to be towards different companies. If you don't know, an ETF, right, is weighted of sectors. You could have, I'm just going to give you a really easy description. All right, let's just say you have real estate and you have insurance. All right, we're just going to stick with two. All right, let's just say that ETF is weighted 60% real estate and the rest in insurance. Well, as real estate moves and goes up or down, that ETF is going to be more influenced by real estate than it is insurance. So if real estate has a hard sell-off type of day and insurance just goes up a little bit or is flat, chances are that ETF is just going to be down. Now, if they're both up, then obviously it's going to be really green. So that's what the weighting is where's the weighting and shift from technology, energy, insurance, again, real estate, consumer cyclical, consumer defensive, all that good stuff, technology. So where's the weighting going to be, and how's it going to be shifted, and what companies are leaving and what companies are being introduced? I did read that. I think they already did release that. I'm not going to go through it right now. So I want to go over some charts. I'm going to go over this news. Apple. Let's start with Apple and Unity. Apple and Unity are going to be hand in hand. All right. So Apple introduced their headset today. I need to know the damn name of it. I seen it earlier. Now I just forget for some reason. So I had it up. Again, we're live Monday through Friday, 7 a.m. to 4 p.m. Okay? Come join us. Come trade with us. Come get some ideas. Come hang out. We usually, in the morning, we're going to go through the markets. That's where your volatility's at. That's where all your movement's at, is in the morning on the bell. So the first morning, or the first part of the morning, we'll get into like what we're getting into, what we're not getting into. We're going to figure out the game plan before, but as the market opens, we're going to trade, see what's moving, what's not moving, help ourselves out, as a whole, because we all have two eyes. We're just one person. We can only see so many stocks. So it's a good place to come to if you want to know, where's your relative strength, where's your relative weakness, and position yourself if you so choose. So we had the Apple conference thing today, the WWC something. But man, that thing is badass, guys. Let me tell you, that thing is badass. If you didn't see it, I watched it. Now they introduced this desktop thing with with just a ton of data and stuff, and it's more for business. Like, I think that price was around $7-8 grand for that computer. It's a lot of their products are still the same, but I guess they've made new changes to the M2 processor. Now, sorry. Let's get on to the headset. So as they brought out the headset and said the prices, the stock sold off. Okay, the stock sold off, the market sold off, but I think that was all in timing, and that was already pre-planned. Okay, I was in puts today. I only bought a few contracts because I felt 430, the risk to reward, it's there. All right, I'll go over my trades here at the end, and I'll tell you guys what I think the SPY does, or what, where I'm going to be, what I'm going to doing as of now. Because, as soon as we wake up, there's always news out. Something happens in the morning. Okay, so Apple, this was a nice trade if you guys were on it. I mean, Apple's, I want to say what? Apple's at all-time highs, guys. So we're going to go over the levels. Let's go. I'm going to start with the weekly chart. Yeah. Apple put in an all-time high. Now, a healthy market, you should have other stocks making all-time highs. Microsoft, Amazon, Google. No, they're not. They're down here. Well, Microsoft's up, but like Amazon, Google, they're still down here, guys. They're laggards. They're lagging the market. Well, and I say the market because Apple pretty much is the market. Okay, the heaviest sector, heaviest weighting in the S&P is Apple. Apple and the Dow, and Apple is the market. So what Apple does is usually what the market's going to do. So you always want to keep your eye on it. You want to watch the dollar. You want to watch yields. Your 2s and 10s, TLT, HYG, LQD. Those are corporate bonds. So Apple put in an all-time high today. It's pretty crazy, isn't it? And it was a catalyst. And look, you closed literally at all-time highs. I mean, just about. To a T, it looks like. If you guys can see that line, 184.95 was the high. But so let's go to the weekly. Let's go see what's what. Well, so far on the daily, we can just see that trend line is just that this is my 9 EMA, the yellow. The red is 50-day moving average. Teal is 200. Blue is 100. Now, I have other charts. So if you guys don't know, you always want to use... People don't know this, and people don't talk about it enough. Okay, if you know what a moving average is, you should be using different moving averages for different markets. Let me rephrase that. You should be using a different moving averages for a bear market than you do a bull market. Okay, so you want to have different moving averages that you use in a bull market, and then you have your moving averages that you weigh to in a bear market. Now your 50, 200, and 100 are your basic. Everybody just uses them for whatever reason. Now I don't know why they don't use like a 62 or 63 moving average. That would give you, I think, a quarter if I'm doing the math right. But 50 it is. It's psychological number, I guess. I don't know, but that's what the broad market uses in a bear or bull market. So we use that. But intraday, use the 20, the 14, and my 9 EMA. Now, real quick, why should you use different moving averages? Well, first, Google and no, you need to go learn what a moving average is first. Okay, and the more time that you have with that moving average is going to persuade that moving average in one direction or another. So if you have a bull market, you're just climbing with very little pullbacks and you're climbing. Okay, bear markets, you're going up, you're down, you're up, you're down. There's volatility. So that moving average is miscued because it's just going up and down and up and down. So you want to take out the time and use shorter moving averages because you're going to get a nice reading. You're going to see that you're going to get bounces off of them. You'll have to figure them out. Like I said, you could use 14, which is 2 weeks, because in 2 weeks' time in the bear market, as you see, like last week we were at 416 and then now we're at 430 in 2 days. Do you see what I mean? So that's why you want to think about using different moving averages for different market cycles. Okay. Again, it just comes down to the meaning of a moving average. And I would say 75, 80, 85% of retail traders don't even know the meaning of, like, the use and the actual reason behind moving averages. If they did, they would know to say, oh, shoot, then maybe I should use it different for this type of market cycle than that market cycle. Anyway, look how far extended we are above the 50-day, guys. We are extended above the 50-day. All right, so what I'm going to say is let's pull up the weekly chart first. I'm going to run through this real quick. I don't want to get off topic or anything. Look at that, guys. Look at that. That's crazy. That is crazy. Look how far away from the 200. The 50 days below the 100. That's not bullish. But again, it doesn't, it just hit all-time highs. So real quick, earnings were good. Debt ceiling passed. Inflation seems to be coming down. There hasn't been a banking spur yet. Until you get some kind of crazy news, then you can think about being short. But don't get caught being short, guys. Don't fight the trend because of PEs and the fundamentals don't make sense. Just put that shit aside and trade this chart. Look at Apple. If you're trying to short this thing the whole time, you're doing yourself a disservice. Okay? Again, until you have a reason to be short and catch downside for the market to go down, there is going to be a catalyst and a reason, and just wait for it. If it doesn't come, it doesn't come. You need to be buying dips and selling, into strength. I mean, if you just pull up the S&Ps and probably even Apple, like the past couple days, what happened? In the morning, sold off, bought the dip, bang. All right? Sold off in the morning, buy the dip, So just keep that in mind. All right, so again, Apple's just way extended. Do I see a trade here? I mean, you can always trade Apple. All right, you can always trade Apple. I would just keep that. First off, I would keep this 9 EMA up on your screen, and just, I guess what I'm trying to say is, me personally, I am not going to be long this stock or anything just yet. I just don't trade Apple that much. I do trade it. I did have a big trade on it a couple years back when they did the split. I was in calls that July that the VIX, remember TVIX, the VIX? I don't know if many of you remember. But I took that opportunity and bought October, November calls. And then August, September, they did the stock split. And those contracts were up. I think I had like 3 or 4 of them. And each of them were up $6,000, $7,000 each. Sorry, I just had to get something to drink. So, I don't really see a trade here, guys, honestly, unless you get back down to the 90 EMA and the market. So, I would look to see what the market's doing. If the market's going to go up, I know I said Apple is the market, but still, you have oil, banks, all the other stuff to, as long as technology sector is going up, then I would be just watching your volume. Look at this sell volume, guys. So, it feels like today they were pretty big sellers. Keep an eye on your volume. All right. Until it gives you a reason to short, though. I wouldn't. And look here, just because it breaks the 9 EMA doesn't mean that it's time for it to go down. All right. You need to use your MACD, you need to use your RSI, and even you use your stochastics. Stochastics is really good for knowing, is this new money coming in or old money leaving? Okay, and you're going to see divergences. That's what I love about bear markets is the divergence. I've caught so many trades on the SPY and all these other stocks as they're going down, and you're getting your moving averages or your RSI, your MACD, your moving average divergence is going up and the stock's coming down. That's bullish divergence. Now, the timing, if you're going to buy options, just give yourself time. Because if you think it's going to go up in a day, well, you better be pretty damn sure or you're going to get burned with theta and all the other Greeks. Just check your deltas, check the volume of the options, check the open interest. Put yourself in the best position. We teach you that stuff here. If you guys want to join us, we're live Monday through Friday, 7 a.m. to 4 p.m. All right, we teach you things like that. What options are you supposed to be putting, or should you put yourself in to give you not only the best risk, but the best price that you're going to get out of an option? How do you know? How do you know what option is going to pay you the most? Who's to say you should have just bought in the money instead of $1 or $2 out of the money, or the option contract that was $2 out of the money is the one you want to be at, and when it gets there, it's going to be paying the most. Or if it goes past it, or you want to use the chart and you want to use the options chain, if you know how to read it and read it correctly. And option chains do have level 2 on them, so you can see what market makers are pricing and bidding and selling and asking. You need to know the lows and the highs of that option price, because you'll know ahead of time if a stock's coming into support. Apple's here. It's turning it into resistance now. Look at this double top here. Flat top resistance right here. I'll just draw a line. But what I'm getting into is the option contracts. Now I'm going to look at the puts and say, yeah, this had a high of $2 and a low of 10 cents. And it's up here at 10 cents. I'm like, well, shit, chances are, I got 10 cents of downside versus $2 of upside. Depending on your expiration and all the other Greeks, you have time, theta, delta, gamma, all that good stuff. We can teach you all the Greeks if you don't know what they are. But knowing things like that and open interest and volume and how they change and how they work and how contracts like just change hand to hand, it's really, really important. And a lot of people don't succeed at this because they don't know this stuff. They wouldn't think to go look at the option chain and not only know which one they should be in, but the one that they should be in. They don't know the highs and the lows of it to give themselves the best opportunity and put it to the chart. Like if I know if the puts were 10 cents up here, and I'm just going to say $1 here, all right, and they've lost. So I'm like, man, I have a 10 cents to $1. That's 90% upside, guys. So, honestly, if you want to be real, that 10 cents to $1, that's almost that's 900%. But anyway, 10 cents goes into $1 10 times, right? Or really 9 times because of the 10 cents. You got to factor in the premium you paid. So if I know that, and I know if Apple's at all-time highs and I'm getting an increase in volume, chances are I'm going to take that 10 cent put and ride it to 50, 25, 30, 45. You get 10 to 20 cents, from 10 cents to 20, guys, that's 100%. All right. Obviously 10 to 30, that's, you've doubled your money and got your money. That's it's so. All right, I just wanted to go over that just to kind of like reiterate that you guys know that I know what the fudge I'm doing. All right. So Apple did hold support here, guys. So this is your level right here. Let's look for the 179.22. Call it 180, or we'll call it 179.20. We'll give it a little room, probably 50. See, 180 to 5. So there's a dollar range there. All right. I'm going to do something real quick. I'm going to show you guys something because I'm actually going to put this on watch myself. All right. So what I do also, guys, is I put in the morning when I have a watch list. I have stocks that I'm looking at like that like they have to have news. If they don't have news or they don't have a catalyst of some sort, why am I in it? There's not volume. There's not a reason for the stock to move. Chances are there's no, institutional money getting behind you, and you're getting in the flow. You're putting the best possibility of a winning trade together by doing that. All right. You need to have the wind at your back. So here is I'm going to call it resistance number 2. So what I do is I have 3 levels. I put my level of resistance. I have 1, 2, and 3. Come on. Now I want major levels too, though. Obviously, this is going to be a major level, this all-time high. Okay. If we were to open up here tomorrow, this is going to be, because it's not broken just yet. All right. It did turn this. This is a minor level. I would call this area right here a minor level. Now this would be somewhat of a major level right here, because this is a flat top right here. You have a triple top. You have an intraday triple top. But you can see this is a major level of support now, because it hasn't broken down yet. It actually broke down. You tailed back up, and it's holding it for the most part. Now I have to dig into different time levels and get it squared away. So for now, this is support 1. Where's support 2 at? Right here. This is support 2. All right. Where's my support 3? Well, there's not much price action up here because it's at all-time highs. You can go with, the prior day's open, prior day's close. Okay, but that prior day's close is going to be here right at our support. So I'm just talking about now. So that's how I do it. I have resistance 1, 2, and 3, and support 1, 2, and 3. I have 3 levels that I know I'm working with. All right. So I'll probably do this in the morning because I want to run through everything with you guys. So they announced Unity. Apple announced Unity software they're going to be partnering up with. And I don't remember. Yeah, I thought it was you. I wasn't sure though. Unity, guys. Unity halted. Unity halted today because of the announcement. All right. And let me touch on this real quick. This is why. Oh my God, not Tim Cook. I know his name. I was saying his name all day. The CEO of Disney. That's why he is who he is. I know his goddamn name. I'm just having a brain fart because I was thinking of Tim Cook. Because Tim Cook looks like a creep. Am I wrong on that? Am I the only one who thinks that Tim Cook looks like a creep? Seriously. I know his name. Robert Iger. There he is. The man himself. Back in action. All right. He is who he is for things like today. Disney, or not Disney, but Apple also introduced a Disney thing today. So Rob Iger, this is why he is who he is, because of things like you just saw today. And I had a play on Disney earlier. I'll go over. But Unity. They're working with Unity software. What does Unity do? So Unity creates this platform for creators. All right. They had actually, and I looked at their Q1. I was going through their earnings. And their earnings they are bleeding. They are bleeding, or were. Their revenue, though, is starting to obviously ramp up. And this is going to help revenue. This is going to help earnings and all that. But if you don't know Unity, they provide a software for creators that make 2D, 3D games and apps. And they also have a platform where they can monetize off of it, with information and all that stuff, I guess. So that's Unity in a nutshell and what they do, if you didn't know what Unity was. So you could say a sympathy play. If I were to look at Unity and I know that that's what they do, well, what's Roblox? What about Roblox? I mean, they didn't have anything to do with Apple, but just to see, they didn't really have it. But Roblox is like a Unity in a kind of like in a sense. But no, there was no sympathy play there. You always want to know sympathy plays. Like if Disney does something with their streaming, what's Netflix doing? Does it hurt or help Netflix? Like things like that. And you can also use that to like help yourself not pay up for volatility. As much IV, implied volatility. That's which is premium being priced into the option contract because of the uncertainty of the movement. So you're going to pay more in either direction, because if you're a seller, you're going to want to protect yourself. Anyway, Unity. So let's go to the daily, see what we're going to do. God, there was so much news today. I love it. I was so scared that this week was going to be slow. All right. I was so scared. All right. So first thing we noticed, we have a long tail here. So obviously we have the highs, which I will do that tomorrow, but we close. Let me zoom in just a little bit and we'll go over the, look at these moving averages sitting all right together, all pretty and such. This logarithmic, it's where the chart, see how it moves up. I'm trying to spin it down and I go up and it gets real tight and small. All right, so where's our first level of resistance? Where's a major level of resistance? Our first one, well, this is a gap fill right here. I don't know if you guys can see it or not. All right, there's a gap fill. See that gap fill? Gap fill right there. Oh, wait. Where'd it close at? 36.36. How funny. See how these things work out if you know how to read a chart? That's the first thing I noticed was the gap fill. Because you cracked the 200-day moving average. You blasted through it. With a catalyst. This is on my watch list this week, guys. There's a catalyst. All right? It may be shortable because this is all futuristic earnings possibilities. All right? Now, if you get some other type of news, But I'm not saying to short it. I'm going to let the chart tell me what to do. So there's our first resistance level, guys. This gap fill from the beginning of the year. All right. Where is the second? See, we're not in now. We're going to do support. All right. That is this gap fill right there. Which is pretty much your base. There's a lot of tails right here. I like that better. But no, so we have the gap. That is the gap. We have that. Where are we pulling back to? We could pull back to the 200-day moving average, okay, which is here. So with this stock going up like this, you guys going to realize this is your 50-day. So the 50-day goes back 50 days. So as far as a longer term moving average, like this 200-day, it's going to take a lot to push it up or bring it down because it's got a 200-day lag. This is 50. Now, with this blast off rocket ship, this 50-day is going to be pointing even more up by tomorrow. You're going to see tomorrow it's going to be jumped up. It's probably going to be right here where my cursor is, right around here. All right. So I'm just going to put in resistance levels here or support levels right there, and there's another gap fill back here that it lines up with perfectly. Okay. So here we go. All right. We closed below this, so you got to watch. You want to see a pullback. You want to see if we get a pullback. And then we have a previous pivot high right here, which probably, no, it doesn't line up with any of the moving averages. It does line up with, look, resistance. I should have did it here. I should have done it there. You see that, guys? Look. Support, breaks, resistance, support. Gaps down, goes right through the level, and look, boom, boom. That's a double top. That's a break through the double top. So the chart told you prior, if you're watching Unity, chances are after this one, and look, I guarantee you if I go to the MACD, look at that. So let me explain to you guys real quick. This is what you need to look for. This is the stuff you need to look for. This is the stuff that's going to pay your bills. This is the stuff that's going to buy you that new car for free. All right, this is what you need to pay attention to. This right here. All right, what do we have here? All right, let's go through this. Stock comes down, puts in a new low. All right, puts in a low here. Let's go here. Look at your MACD. All right, see your MACD down here? I can put in a circle or something. All right, so your MACD puts in a low right there. Even it's to the left. And where does that line up with? It lines up with that low. Okay, now look here. Here's our new low. Now we have a new low on the stock right here. Boom. Look at your MACD right there. These circles suck. Look, bearish divergence. The stock is put in a new low. Your MACD is putting in a higher high while the stock is putting in a lower low. Same with the RSI. No, it's not actually. That was it on the RSI because the RSI is a different reading. It's relative strength index. So the stock comes up. All right, comes in, puts in another low with a higher MACD here. Now, what happens? We do it again. Now, we're pretty much lined up here. You see how we're lined up? You could call that a double bottom, but the MACD, see, it kind of it's kind of a little iffy on the daily. But ultimately, your trade line and MACD, you know, it was kind of evened up. But look here. This is the point I want to get to. All right. Stock puts in a new low. Higher MACD. Now, I think this was all earnings. Yeah, see, look, there's your earnings. That's why. That's why the MACD was down, because you had a catalyst. You had earnings. So that is going to bring it down because it's going to bring volume, ETC, etc., etc. So we're going to start from after the earnings. You put in a low. There's your MACD. You put in a lower low, and your MACD puts in a higher low. You put in another, you pull back to another low, and look at it. It's actually positive. It's damn near positive. It's not negative, it's positive. So this is bullish divergence right here, guys. And now it's hard to time on the daily, but I could take you to the 15 minutes. That's why you want to use your 15-minute, your hourly, and all that other stuff. All right, because different time frames tell you different things. All right, so let me remove all this stuff real quick. So you had a story being told right here. All right, did we know it was going to be the Apple event? No, but the story was told. This is what I mean by being able to read a chart, okay? You can expect something to happen. Like, I'm expecting something to happen to Ford, which we can get into the GM and the EVs. GM was talking about non-profitability, that it's going to take them way too long to be able to make any money with this stuff. Like, pretty much saying, like, Tesla is Tesla for a reason. They are the Mac Daddy of them all. All right, and there was news with Ford Tesla allowing Ford to use their setup for their charging systems. All right, so we got a big increase on volume, guys. So tomorrow's Unity is going to be in play. So if you want, I would personally see if you pull back. See if you get a pullback off the bell. You want to watch this level here, this 35. Now you also need to know the news of the day, because it could just, if you get some type of Russian news, war, banks, anything, you can just put all this aside and don't even worry about it, because there are headline risks that can come into play, being in the middle of the trade or before before the opening bell. So let's go to the 15-minute chart real quick. I'm going to try and get through this stuff as fast as I can, guys. Nice uptrend here. So these are my levels right here. Right here. All right. I'm going to make this a double. So if we cannot break out to new highs, it could also sit here. All right. Now I'm going to put, I do want to put one for yesterday's high, which I'm going to go back because I use a turquoise dotted line for the close, the high, and the low of the previous day. So I know the range. And like if you break through the previous day's high with increase in volume, chances are that pullback to the previous day's high is going to hold because it broke it with increase in volume. Okay, things like that. These are the things you need to know if you want to make some money trading. All right, there's so much stuff that people just don't know, and then they think the market's a scam. Well, you never got educated. You don't know what the fuck you're doing. All right, so that's Unity. I got my support and resistance level here, guys. So 3160 or 31.6. Yeah, 3160. All right, that's going to put us at our opening range of the day. So that's previous. That's the previous morning or today's morning, whatever. It's a double top this morning. Now, did the market know about this prior, leading up to it? Look at this run. It was already on an uptrend, so maybe not. Maybe there was word. Maybe there was an article somewhere written that maybe Apple was going to go at Unity. You know, I think Lucid got the lift off because maybe Apple is still like wanting to give Lucid some time with their vehicles. Hey, we called that news out. If for those of you who don't know, when Lucid put in that ascending wedge, we said it was on over the weekend, I think, and then on that Monday I said, watch Lucid. There may be some news coming. All right, there may be some news coming. It was right there. And then look, I can draw it for you, and it broke out, bounced, hit it, and had a rally. I think that was it, or it was right here. I think it was right there. It was this rally, I think. I have to go back on it. It looks different. I have to bring up TradingView. But I have a picture of it. I have pictures of it, and I put my little arrows and shit. So, like I said, just read the chart. That's all you got to do. The chart will tell you everything you need to know. So what happened? Why I brought that up was there was Lucid Car on the thing that was like, it was like a iPad or something, and you know, traders were like, oh shit, they are thinking about using Lucid. Like, it was kind of like a subliminal sign, like, hey, we still want to do a car, and Lucid is who we want to go with, but with the uncertainty of a recession and them being a new car manufacturer, and I think Apple's kind of just wanting to wait and see if they're going to be able to stay afloat before they do decide to like start putting things in writing. But that would help Lucid if they did, you know. And then it comes with sales. Like they if you listen to any of these earnings calls, even Apple, they don't know what's coming. They don't know. You know, they're just positioning themselves for a slowing growth. But and we're seeing it again with the data. So there we go, guys. We have Unity. All right. We have Unity. Worst case, if things get bad, look for that 200-day to hold on the daily. But here's your support and resistance. Again, you break your 36.50, we'll call it 36.48. Wait for, if it does break, wait for the bounce back and see if you get the rejection. Because you could always get a failed breakdown, and then you don't know who's going to be sitting there if you don't know how to read the tape in the level 2. This is level 2, and then I usually have my time and sales up, but there's no reason to, because there's no orders being filtered through the, you know, market's not open. So, but watch your time and sales, watch your level 2. If you don't know how to read them, come join us. 7 a.m. to 4 p.m. live, Monday through Friday, youtube.com, Ivy League Trading. All right, so that's you know, you have a catalyst here. So tomorrow, if you open up, just we got to see where we open up. If we gap down, then I'm going, if there is a gap down on Unity, I'm looking to short up here at 36.50. Why am I going to do that? Because I know now I'm going to gauge the S&P tomorrow. Just because we gap down doesn't mean I'm going to be short. Let me just say that. But if there is a gap down and I feel the market's weak, I will be shorting bounces. I'm not just going to say, oh, the market's down, we gap down, and just all of a sudden take a short. It's not how we do things. All right. I want to see it backtest this support resistance and make it resistant. That's going to tell me the stock is going to be weak for a couple days. When the sellers are you know, selling this stock up here at 36.50. And then what do we look for downside? We just look for, you know, our levels here. All right. This is our first level here at 35 flat. It's a psychological number. It's a nice area of resistance or support, I mean. So these are your levels of support. Now, if you do gap down and we bounce back and can't get back up above this 36.50, call it. All right, when you short, you need to take profits. Like, say if we open up and we gap down, okay, and it gets balled up and it starts to roll over, take the short. All right, as it's coming down to the opening price, you need to be taking profit. Take pieces off on the way down, because you don't know if this level is going to hold. Like, there's not much price action here. There's not much structure. There is to the left, but as far as a day, it just broke out. So you could retrace all the way back down here, make up for it, and then work its way back up over time throughout the rest of the year or whatever, what have you. All right. So again, our levels, we're going to look for. I want to say it's going to gap down tomorrow, but this doesn't mean, you know, that it will, because it has a catalyst. You know, doing this with Apple is a pretty big deal. But anyway, 36.50. 35 flat, we'll call it, and then we have our, you know, a minor level here at 32.97 and 32.55. All right, the upside is going to be that gap fill, you know, that gap fill at $40, 39.50, $40. All right, and that's and that run alone from 37, 8, 9, 10. That's a 4 or 5% type of day. So that's still that move there. You know, I don't expect it to break just yet, but it could depend. If the market's strong, it could. It all depends. Got to see how we open up tomorrow. Sorry, I don't want to spend too much time on this. I got to get better at this stuff. What else do we have? We have Mobileye. Mobileye news afterwards about an offering, and we knew about this like a while back. We were waiting for Mobileye's this offering because Mobelly. Like, share, and subscribe and comment, guys, if you could. Mobileye right here. News after hours. Okay, about an offering again. So this isn't something to do with Intel. I don't know the ins and outs. But we took this. We were already on it here. Look, my levels are already up. I haven't visited it since this. So whenever you have a new offering, like a new stock, it's usually like 60 to 90 days. If you were to look up the months here, so look, November, December, August, February, March. So what happens when a stock IPOs, okay? There are X amount of shares that are locked up. That's with employees. That's the board members, just any other individuals that bought the IPO before it was released. I mean, you can do those type of things if you have the money for it. You can say, I want this. You could have you could have been a buyer at $15, $20. All right, and what happens is they bid this thing up before it opens, because they usually open at like 11 o'clock. All right, 11 o'clock, 12 o'clock is when it'll be up for trade. And you'll see the price that morning. Now, you can't trade it, but it is being traded, behind the scenes between institutions and just people. All right, so you have an X amount of shares that are locked up. Now, the people that own these shares, they can sell maybe whatever. You'll have to look it up. I don't know exactly what it is offhand, but they have a certain amount that they can sell if they'd like to, and they usually do. That's why you get a sell-off. Usually you'll get like a big rise and then a sell-off because of profit taking. They own the stock at $10, $4, $5, $6, and it's IPOing at 25, 30, 40, 50 because it's getting bid up. All right? People make livings off of IPOs. Just making livings off of IPOs, buying them at discounted prices, and when it hits the market, they're able to sell them. All right, so anyway, the offering's back on the table. And look, I have a pennant up here. That's hilarious. And look how it broke down from that. Look at that. You see this? This tells you that this guy knows what the fuck he's doing. This tells me I know what I'm doing when I see stuff like this. I done forgot about this. I forgot about this stock. Because, catalysts come and go. Like, look at that. So, damn, that sucks. Because that could have been a nice trade. What is that? 46.35 to now 40. That's a $6 move on a $40 stock. Shit. What is it down? Well, that's not counting after hours. But anyway, let's run through this real quick. So, we were already expecting. All right, we were already expecting this. We were expecting this back here. Back here. Why were we expecting it? I think it was like right here. Because we knew that these shares were going to be unlocked. We knew this. We knew the shares were coming unlocked. I did it with DraftKings. I did it with Mobileye. Like, the list goes on, guys. All right? So, this is why you need to come join us during the day, guys. Monday through Friday. IvyLeagueTradingYouTube.com. All right, you're going to get this information. If you want to do this for real and you want to learn to be a trader and do this for real and put in the work, come get the education. It doesn't cost you nothing. It doesn't cost you nothing to hit the like button either and to subscribe. So anyway, we took this short. We were short here. This was a big day. Those options were up about 400 or 500%, okay, on this gap down when the bell opened. We bought them, I think, 2 weeks out. You could have got a week out, 2 weeks out, a month out. You want to be safe because you don't know for certain, but I'm going to tell you right now, 7, 8, 9 times out of 10, when a stock is up from the IPO price this as much as this was, they're going to take profit because they're not dumb. They know what they're doing. All right, when you're look at this. I mean, they've made X amount of money on their dollars at 40. Who's to say they got in at like $10 and they're up 4 or 5 times their money, and they've got 5, 6, 7, 8 million in this, and they've just, made an extra 40, 50 million dollars. They're going to take some off the table. You best believe that. Can't blame them. I would be doing the same thing because it's not yours until you take it. Remember that. Jim Cramer taught me that one. If there's anything I've learned from Cramer, and I'm not gonna disrespect the man and say it's not much, but he did teach me early on that it's not yours until you take it. And I just never let that one go because he's right. He's right. You can sit there and think just buying stocks and holding long term is a good thing. Well, yeah, if you buy the companies that, your Apple, your Microsoft, your Amazon, stuff like that. But those stocks are not going to give you the 1,000% because they're already, you needed to own those companies in 2008, early 2000, 2010, 2015 even, they're not going to be a 10 trillion market cap, all right, in 10 years. It's not possible, all right? It's not possible. So you got to think about that. What's going to be the new leaders, all right? What's going to be the stocks that are going to give you the next 10, 15, 20 time return, all right? And that's why I say investing is a whole different ball game. All right, so Mobileye, let's go through the levels, guys. Mobileye announced another sell-off, something with Intel. I think Intel owns a lot of the lockup stocks, or the shares that are unlocked. I think Intel owns a lot, but, so you don't know what the employees are going to do. Somebody gets fired and they got to cash out, or, I wouldn't think about it too much, but they're doing the offering. So what do we have? What's first? What are we coming into? 50-day moving average, which is coming into support right here at this double top. See that double top right there with the gap fill? All right, didn't really have to do with the gap. So look, there is my first right there. It should be like right there. I hate using the daily, but yep, right there. There she is. So what's going to happen? That 50-day is going to come down. We haven't had enough time yet for the 200-day, but if you get this 100-day crossing back down below this 100-day moving average, I want this stock down here again. I want that stock down here at this $30, $20 level. I would love to catch a $20 move on a 50% move on a stock like this. All right. So that's going to be on watch tomorrow. Let's go to the 15-minute. Tomorrow morning I'm going to go through everything else because we don't know what news is going to come or what's the volume going to be like. We won't know until we know. All right. So as you can see already, look at it curling back up, and it looks like it's getting ready to hit that resistance again to just sell back off. So I'm going to put in my levels here. I already have these down here. All right. Let me take off real quick. I do them both ways. This is going to take a little bit, guys, because there's a lot to go through. And we got to go through coin real quick. We're going to go through Coinbase. All right, there's our next. So if we get a bounce up, we're going to hit VWAP on the 15-minute chart. This level is real quick. So 42.87, call it 43. There's a 20-cent spread there. It's not a spread, but there's, if you want, because sometimes stocks will get to a psychological number, like a flat whole number, and then decide to sell off or whatever. So if you do decide to get short on a bounce, give it just a little bit of room. All right, give it a little bit of room. Or, if you know what you're doing, you're going to see that the volume is there, and even before it gets to that level, they're packing in, and you need to know when to hit the pedal, or you're going to miss out on the move. And it's going to just run without. You're going to be like, damn, it's down $3-4 and I never got in. Should I get in now? And then you get in and it bounces back, because stocks don't just move in one direction. They have bounce backs and pullbacks and stuff. And then you take it for a loss, and that's how you just find yourself in this vicious circle, because you didn't put yourself in the best position when you got in. It's so important to practice your entries. Don't even worry about making money, even if you want to paper trade or even use real money. Take days to practice entries. It's so important. Different things. Take a day to read your level 2. Take a day to read your tape. You need to know these things, because you're going to see on the level 2, the bid and ask, you're going to start seeing every time it gets to like 46.65 or 47.75. Like, it'll hit that number and then just reject. And then you'll see it go down to 46, 40, 45.80, and you'll see it bounce off 45.80, go back up to that 47.75 level, and then just reject again. So you know your range there. I've already given you a range by saying it out loud. it tells you that in the level 2. Trust me on this. If you just spend a day or two, use your level 2 and your time in sales to trade, because it's going to psychologically in your head give you damn near to the penny the level that you already know. As it's getting into it, chances are it's going to reject it. That the stock has had trouble there all day. That's where I want to be short, or that's where I want to be long. And that also helps with your entries. So you got to practice that stuff. It's the only way you're going to get good. And let's not even just talk about the fact that that's the best way to manage your risk is by getting into your, getting in the appropriate places, because that's how you minimize your losses. All right. Now, sometimes you get a stock like Mobileye and they're just liquidating it. You may get them selling into the level and it doesn't even reach it and it's rolling over. And you just need to know that by being able to read the level 2, your time in sales, and your volume. So look at this close on the day. Look at this. You see this high volume here? Look at this. It's red. You see this red? These are institutional ownership selling. They know what's coming here. Look at this, rounding up top. 47, 50. They're taking, this is your set, they're selling. They're closing the day out and selling. They're not doing it during the day because they don't want you to know what they're doing, because they want to continue to sell this stock up here. Because you guys got to understand, if they own, let's just say 100,000 shares, 200,000 shares, they can't just say, push the button and sell 100,000 shares. Could they? Probably, but that means they got to pick up the phone, call a fund, and that fund's going to say, you know what, I'll take those 200,000 shares, but I want them at $39.50. All right, so if they just piece it out and piece in, that's what they do. That's big money, guys, and they piece into positions and they piece out of positions. Just like you should do trading. If you're buying 10 contracts, you need to be piecing them off as it goes down and as it goes up, taking your profit. Because that's how you also let a green trade go red, because you sat and held it and it did what it was supposed to do. And when it got there, you were like, either you were greedy or it had, for whatever reason, you didn't sell it. You just wanted more. You just wanted to say, I got 100% today, 1,000%. But instead of saying that, the stock got to where you should have sold and then turned around and then it went red. And now you're kicking yourself in the ass, and then you take the loss, and theta and everything else is eating that contract up, and now you've just let a nice green trade go red. I can't stand how I've seen it. I can't tell you how many times I've seen it. I don't understand it. I really don't. And maybe that's how people learn the hard way. All right, so I do see a decrease in volume here. Big volume up here, guys. See that? Here, and then look at those 3 days. Look at that volume. So I'm going to look for some volatility in Mobileye tomorrow. Okay. I'm going to look for some volatility. Now, where can this thing go? Let's go to the 15-minute chart real quick. I'm sorry that I get off track. I have ADHD horribly. So this is the first level we have. We do have a small base up here, but you have a double bottom with resistance there. I don't expect it to retake back all this. If it does, then I need to find something new to do, because so we have a pivot double bottom down here. I'm not just trying to pick random places. Like, there's levels for a reason. Because this stock is new, you're not going to have much structure. You know what I mean? Because the stock hasn't traded that much. It's only been a stock for since October, November. And this is only a month and a half of price action, guys. So it's a little hard to find your levels, but they're there. Like right here, I'd call this your target. I'd call this your target if you get down there. See, it's hard. It's just hard. Let me see. You know what? I'm sorry. That's why, because I'm on the 15-minute. I'm like, what the heck's going on? So let's go here. All right. The flat top resistance. All right, that'll be the target. That's the target right there, ladies and gentlemen. Let's see if we get there in a couple weeks. If this stock does sell off, let's see if we get there. So I will go over this in the morning. I want to see what it does tomorrow. This is my other level right here that I want to put down. It was a little bit of a base. Maybe if I looked left a little bit more. Like I say, it's just a little difficult because there's not much price action here. There's not much price action at all. I'm going to call it there. And and look at the tail. I didn't even see that, but look where it bounced off of. So that tells me I know what I'm doing. Because I'm sitting here looking over here, and then, look how it lines up. All right, so we are going to make this red, all right, because that's our target. Or we should make it green, but I'm going to make it red. Or I'm going to make it yellow for the gold, because that's a money shot right there. That's our target. That is the gold, the jackpot. So we did find support. So what would you write down? At least if what I do. All right. I'll go to the 3 minute, I guess. So tomorrow, if we're here when we open up, first I'm gonna look for the close. Actually, I'll probably look for the close tomorrow. But seeing how we do at these levels. So if we reject here and don't make it to the close, and I get short, I see that the stock's having trouble. I'm reading my time and sales. I'm reading level 2, and I'm watching the volume. I'm just I'm doing what I'm supposed to be doing. We start selling off. All right, we start selling off. I'm taking pieces off in front of this level. All right, it's already showed that it's support. Okay, that doesn't mean that we could wake up and it gaps below it. Anyway, I'm taking profit off in front of it, at it, and then on the break, and then I'm just gonna let the rest go. You know what I mean? So boom, it comes back, and then that'll be my final take if we get it, depending on the price action. Again, it all depends on the price action. If the price action is what I want to see, then yes, I'm going to be taking off in front of it and then through it. But if it's like a little shaky, and we do get the opportunity, because this is still this dollar move, $2 move, it's still a good amount for a $40 stock. You got to remember, it's $40 on a dollar move. Do the percentages. Okay. What would that be? With $1 on 40, would that be 4%? Maybe. Yeah, it might be 4%. I'm not sure, though. 50 would be 20. 25 would be 10. Or no, that would be... Yeah, 10 would be 25. $10 would be 25%. And then 10 to 5 would be... 25 would be 13. Or what? 25, 13... that would be 12.5%. 12%, we'll call it. So yeah, I'm about right. So I just did the math in my head. Sorry. All right, so we got our game plan. All right, we look for this 41.20, 41.22 level to become resistance. If it doesn't, we're going to be looking for the close. All right, we're going to be looking for the close, and if that breaks, the close breaks, this is your last line. I don't think it's going to, though. I think we're going to have some selling tomorrow here on this stock. So I'm looking for a resistance here. Worst case, resistance around the close. I'm going to look for the close, possibly. Worst case, or best case, I should say. Not worst case, best case. Yeah, right here. That looks real good. I like that. Right there. That is a good area, actually. See how it lines up with this structure here? It was support here this whole time back last week, the week prior. So... But I'm not going to put that down because that's a minor level. That will be a minor level there, okay? And I'll worry about that in the morning when I see whether we gap up or gap down. It's already 10. I got to go faster. I'm so sorry. All right, Mobileye, and we had Apple. We went through Coinbase. So they want to, the SEC is at it again. Guess what? One more time. If you were on the live last night, we told you guys about watch Bitcoin. We told y'all watch Bitcoin. All right. We said watch Bitcoin. So it just so happens that the SEC came out. All right. So we already have our levels here because I don't know. This is all prior, guys. This is all from prior. I haven't looked at this stock in a while. I didn't even look at it today because I didn't even think about it. I had such a morning where my iOS finally uploaded because I was like disagreeing with it, that I didn't agree with the terms and conditions. So because I didn't want it to change on my phone, and I probably also don't agree with the terms and conditions. So it changed it. It just did it by itself. I put in the code. I said later, and it didn't ask me if it didn't ask me if I give it permission to do it or not. So it didn't. So my alarm doesn't go off. Now I look up my phone. I'm like, shit. And the alarm, I can see it's on my phone, but there's no noise. So I got to make sure I get that before I go to bed tonight. All right, so we have a tail here. We broke below the 150 and 200 day. Guys, that's important. That is weakness. Look at the volume too. Guys, this is another stock. So Mobileye, and Coin are the 3 stocks that are on my list. Coin just broke all 3 moving averages in one day, guys. 150, 200. That's big. And closed below them, mind you. And look where it stopped. Or look where it closed at, right at this resistance. I pray to God this thing opens up here tomorrow. I would pray. Even if I could get it up, even better would be up here. But I am looking for the short, depending on Bitcoin, but I will probably still short it because it seems like Gary Gensler does not want anything to do with this industry, and it's sad. They're not making any laws, they're not doing what they should be doing and working together and being responsible human beings that get paid a lot of money. So they need to just stop the bullshit and get together and figure out what it is they're going to do. Because now it's getting ridiculous. Now they're just going to sue them and this and that. So you're okay to sue them and take their money, but they're not okay to be enlisted and be legally, I guess, federally chartered, I guess you could say. You know, maybe that's not the word, but like, come on. But yet you're okay. Like, let's just sue them and get some money. No, that's a dick move. That's why you guys got to start voting the right people in office, because this is ridiculous. We need an SEC individual who's going to actually do the right thing, whether it's not necessarily right, but needs to just stop this game shit. They did it with Coinbase. Now it's Binance. You know, you've seen the FTX stuff. Like, come on, just bring some sort of legislation to this sector. And if you don't, then guess what? It's not illegal to do some of the stuff they have to do if you don't have laws. You know, they can put out their disclaimer. The one of the things was lack of disclaimer. Like, that their disclaimer didn't say, like, come on. Okay? If that's the case, and the person that puts their money in Binance and Coinbase and all these other places can't pick up the phone and ask the important questions, you know, then maybe they shouldn't be putting their money there. All right, Gary? You hear me? Start letting the human beings have responsibility for themselves, putting their money in FTX. Yeah, that was a dick move. That whole FTX scam. But again, I didn't have my money there. So, you know, that's the way that person has to learn, by not following a fad and start making up their own mind on how to do things and what they should be doing. You know, I got it all the time. Do you trade crypto? I'm like, no. I mean, I trade it through the equity market, but no. Yeah, will I want to own it? Sure, why not? You know, at the right prices, you know, I would love to own it, you know. It's definitely another tool to have in your portfolio. All right? You just got to get it at the right price. And that's how you build wealth over time. But still, man, it's just so crazy. So we're going to see what happens with Coinbase. Again, 150, 200-day broke. All right, let's go to the 15-minute chart. I already have all this stuff ready to go. So look at this flat bottom base we put in here. So I'm going to obviously look for this level to break. Now, what am I going to look for tomorrow? So I want to see this level here, or this top range break, which is, well, it's really up here, is the top of the range. But I don't know if you get up there. I honestly don't. So I would say here. I'm going to look here, but I will put a line up at the top of the range, just in case something does change and it does have some upside tomorrow. But this is, I think, the nail in the coffin might be coming soon, y'all. Something's going to happen. Something's got to give with this stuff. All right? Something's got to give. So that's the top of the range. I'll make it a 3. Why not? All right. So there we go. I'm going to look to be short up here at 59.50 flat. 59.50 flat, I'm looking for the short. If it's still weak and if it's still up here tomorrow. All right, looking through the break, I want to see it break this level because it's already broke all the average, your main moving averages. It's already broke them in one day. That's big, guys. I'm so like unbelievably shocked that I did not. Why was I not here on Coinbase? I know why, because my alarm didn't go off and Apple decided to change my iOS and then screw my alarm clock and everything up. Or maybe I would be on Coinbase today. Maybe I would have had a home run type of trade day. I'm happy with how my day went, but still. So, look for this area to be resistance. If it can't break back up above this 58.65 area, look for 59.75 or 59.50 for resistance. Okay, and then you want to see if you get the follow through the break of this range of $56. Could be a big day for Coinbase and anybody who, if this trade pans out, you could see this thing back down at $54, $55. All right, so that's my game plan. I'll go back over it again in the morning. iReallyTrading.youtube.com. Obviously, you already know because you're here, but we are live Monday through Friday, 7 a.m. to 4 p.m. I'll go through a couple more just real quick. I'm just going to I'm not going to go into too much detail because you can join us in the morning for that. Look at 4, guys. Look at this daily chart. Now, I've been watching this and nobody's talking about it. And we can go over banks real quick too. Look at this. So I have this level as a pennant, as this first one, which is right here. And you've seen how it broke and still held it. But I still do have the longer term one in. So if this thing moves, guys, you just measure the width. And you can usually add it onto the next, and it'll give you right, like just about to a T. Okay, so I'm going to be watching it. And I think this is the level right here. This line right here, I think, is the width from bottom to top, and that's where it takes us. Okay, so we'll see. GM had some news. So I've got Ford on my watch. If we put in a double top here, I'm going to be short. So hopefully tomorrow we are back up here and maybe I'll short it and see if I can't get this thing back down to $12. Catch a 50-cent move on that. 50 cents on $12, not too shabby. All right. So that's that. What else do we have? We have Coin, Apple, Mobile IU. We went over that. We went over Apple. We can see what Tesla's doing. Tesla had a down day, I think, or it was like kind of flat. So, yeah, I was watching Tesla. I was watching this breakdown, but I was watching something else and missed it. Probably the Apple thing. Disney. Disney was the other one. So see if this level becomes resistance, guys and girls. 216.81 or 88. You can see this double bottom it put in today right here. Boom, boom, and then it broke it. And look how it became resistance. See how it became resistance right here. Rejected it, but it did break up above and hold it, and then broke it again pre-market. So we're gonna have to see. It looks like they're gonna play around with this stock for a little bit. Maybe the sellers have stepped in and are kind of winning the battle here. Especially if the overall market goes down, then you could probably see Tesla back down. We'll go over that again tomorrow. Let's go over the banks real quick. Let's go over the regionals. Look at the regionals, guys, and this is why the IWM was down. Look at that. Now we just got to see if it becomes support. Okay, we got to see if this level becomes support. Because technically, you could break down all the way to here. All the way down to this $40 level, 40.28, and still be bullish. Because what this is showing you on a 5-minute is that you broke this resistance level. And you're breaking out of it. Now you come back and test it, hold it to go higher. Time will tell. Okay, time will tell. I will bring up the 30-minute or 15-minute, same thing. And so I think that's your line in the sand, actually, is right here at this level. If you break this level tomorrow, then I would keep banks on watch and look for that in the future. Look for that 38.50. But, obviously 39.29, because if you break this level, where else are you going to go? Where else are you going to go but here? That's the bottom of the range. So we got banks. We'll have to go look some more and see which ones are hit harder than others. But I think that's about it. GM, we can bring up GM. They had news today. All right. Let's bring up the 5-minute. We'll go to news real quick, and then we'll be done. Again, we're live Monday through Friday, 7 a.m. to 4 p.m. I just want to thank anyone who joined us tonight. I greatly appreciate you guys. I greatly appreciate it. Yeah, there was just plans $1 billion investment. Let's bring this up. So, I've already seen that. Offers license, autopilot tech, accelerate EV market, etc., etc., etc. I don't know. Well, there was news about how they're not going to be profitable for quite a while. Ooh, GM. I didn't even know I had this thing charted. Look at all these stocks that I have charted, and look at the levels, guys. Look how the stock just boom, boom. Like, you know, support, resistance. So this might be a good short. Now that I'm looking at it, this might be a good short for tomorrow. All right, really good short. We're at the top of the range. Does this range? Oh, look at that. Now what do we see? Once we scan in, we had a pullback to the 50 that held, guys. That was a pullback to the 50-day that held. And then look at that tail off of the 50-day. This red line again is your 50-day. And that was a area of support. So this is why knowing how to make your levels, knowing how to do this and that. If I see this stock make another high, but there's a gap right here though. We're there. Where's it at? It's right here. It's technically here, even though this is, you opened and went. That gap is technically here because the gap is open, close, and then you gap down. That is your gap. So maybe we put one there, a small one. See if we can break up above that. And then maybe we see the top of this range. Undo. Oh no. Alright, so that's that. If you do start to break up, look for your, see where you're headed. You might be headed for the 100-day moving average, which would be at the top of this range. Alright. I mean, this chart doesn't look... It's not that it looks bad, but, like, do you see how it's basing? Boom, boom, boom. And he got back down here. Now it's like, are we going to start curling up with the rest of the market? Like, right now. Right now, GM is technically at its lows. At its lows. So if you're not buying this stock, and you come back 6 months from now and it's way up here, and you're like, man, I could have got it for $30. Doesn't mean it's going to. It could always break down further. But it's at all-time lows. This is where you could, this is your risk to reward. You can always set a trailed stop for the downside and upside, so if it does break this level that you're out. You've lost $3-4 a share. I'm not a financial advisor. I'm not telling you what to do with your money. I'm just saying this is when blood's in the streets. And then again, it did have this big rally because EVs were in play. So there's a little bit of that premium baked into it just because all you had to do mention back there in 2022 and 2021 was just mention you're going to start making EVs and you're going to do this or you're going to be full EV by 2025 or something stupid. You know how it is. And the stock just rallies. It just rallies. And that's how the big boys make some money. They just come out with a press release or something and they sell on the way up. So anyway, that's what we're looking for. See if we can get to this 35 level. It's Chevy, guys, like a rock. I wish more construction companies use Chevy. They're great trucks. They got power. I don't know. I'm a Chevy guy. I've had a Dodge, I've had a Chevy, and I never owned a Ford, but I miss. I had a GMC Sahara. I love that truck. So, will I ever not buy I will not buy something other than a Chevy the rest of my life if I buy another truck and stuff. So that's what I have to say about that. What else? All right, last one, guys. We're gonna just run through them. Disney. I traded Disney today. I traded the SPY. I had puts on the SPY. I held them all day and took profits. I did not let those puts go red. I did not let them go red.
I took my profit because I knew there was no volume, and in the morning the New York Stock Exchange or whatever was acting up. So there was some malfunction, and it happens. It happens from time to time. All right, so what stock is this? Disney. So yeah, look, Disney's at lows. Disney's at lows. All right, I might look at some leaps for this. I don't know though. But the fact that I just said I don't know, at the fact that it's at lows, tells me I need to be buying leaps. You see the psychology there? See that psychology? Even been doing this for as long as I have, I still have it. All right. All right. So I'm looking for I want to see if we can get up to the 50-day if this news means anything. This trade was green. I accidentally let it go red. It was nice and green on me, nice scalp base hit, and it's not that I held it like wanting more. Again, like I said, I'm watching my parents' dog again. Just been one thing after another, guys. So if you don't know, my cousin passed away in a car accident, unfortunately. God bless him. And then my grandfather was in the hospital, so my parents, dropped the dog off, watching the dog, and I have a cat. It's my little girl, Abby. So, between the both of them, it's just is what it is. So anyway, the stock broke up out of that level. So my plan was, what was my plan? My plan was, let me bring up the 1 minute because that's what I was trading on. I look at the 5, 2. I look at the 1 minute, 2 minute, 3 minute, 5 minute, 15 minute, 30 hour, 2 hour, 4 day, and week. I look at all of them, guys. I look at all of them. So, because they each tell a story. So we come to resistance up here, right? Look at this tail. Get sold off. Run back up. Tail. Sell back off. Where are we at? Excuse me. We're at the 9 EMA. All right. It's the Golden Cross, the Golden Road, whatever you want to call it. This is the trade line. We had a trade line VWAP cross on this bounce or on this pullback to the 9 EMA. After this candle. After the green one, I mean. Okay. So we sold off. We put in another red candle at the trade line. It didn't break. It closed above it. Then we got the green candle still above it. And I bought here. I bought here on the second green candle. Okay. We go up. We pull back. I'm watching. I want that level. It goes. I get that level. I wasn't able to take it off. So what I did was I said, all right. I was down a couple bucks. I said, that's it. I'm giving it this level. And when I mean I'm giving it this level, no, I was a little green on it. But see, the thing is the volatility from here and then on the pullback and going in, the reason why it was a little red, and what I mean a little red, is like I was so deep in the green here that on the pullback, it sucked it red because of volatility. Volatility, guys. The IV, the implied volatility. It had priced in so much volatility from here because of this whipsaw action with these three candles. The implied volatility was just, I'm not going to say through the roof, but it was. So when I bought here and we get this next rip, boom, it's green. And I mean, it's green. I wasn't able to take it off. It's just one of those things. So it pulled back, and when it pulls back as quick as it does, it drains that liquidity. Like the IV, you just, if you watch options, like just watch them if you don't know how to trade them. If you, especially like moves like this, you'll know what I'm talking about. So we hold. So what I'm thinking is all right, for me to stay in this trade, I need to hold the previous high. Look at the volume though, is decreasing. And I already knew this. I seen this. I'm like, man, it's probably not going to hold. The volume's not picking back up at this level. The sell volume isn't picking up. It's not like it's being sold off, but I still want more buyers because if this really is good news and meaningful news, it's going to be bought up. And it wasn't. I literally stopped out here. I stopped out here, just above it. So, but I had SPY puts. I took profits on those. All right. I had Disney, it was break even. slight small loss with commissions. And this is how we're able to stay ahead, guys. You know, we don't make $3,000, $4,000, $5,000, $2,000, $10,000 a day, and then go ahead and lose $600, $10,000, whatever. We don't lose a shitload of money when we make a shitload of money. We don't do that. We don't do that here. We're green. We're taking pieces. Every trade is different. Now, I've been doing this for a while, so I have an idea of my game. I know my game plan. Your game plan may be different. You may not know how to make a game plan, So that was one of my trades. I traded the SPY today. We got back up to 430. I bought puts on the SPY because we're not going to get through 430 without a catalyst the first try. Plain and simple. Plain and simple. We've had a nice run. It's time for a pullback. Now, if we would have got news like, oh, Russia's pulling out of Ukraine, well, yeah, those puts would have been sold real quick. All right? Those puts would have been sold real quick because you're going to blast through that level. That's a catalyst that's going to put you through 430 the first time. This is how you got to start thinking about trading. What is the catalyst at the level? All right, we've priced in the debt ceiling. We've priced in the inflation coming down. Now what? Does the Fed want inflation down more? Is it where they want it? Not year over year, maybe month over month. It's getting there. So, maybe this is what I'm looking for on the SPY. I'm looking for is to base, okay? And I want to be a buyer at the bottom and I want to be a seller at the top until we get a catalyst that is going to send us through 430. So real quick, you do have a lot of fund managers. If they're not long and they're still short, you may get some, people caught off sides. All right. They may have thinking they've missed the bottom. We could get a bunch of selling going. It's hard to say. I'm just putting it out there that, some people may not have taken the opportunity because there's so much recession talk. All right. So we'll see. Because what I'm getting at is you could have one of these Fridays or one of these days where there's just no sellers, which would typically be on a Friday, and it just floats higher all day long on a low volume, and only to take it right back the next day. So I want to see this double top hold. I want to pull back here. That's my first target. Is 422, 423. It's 423 to 422.90 is the target. That's a double top here. And you kind of made it resistance there, but not, that's pre-market tail like. Just, let it pull back to here and see if we get dip buyers. You get dip buyers, hello 430 again. If this level does not hold and there's no catalyst, this is my second level right here. 420.68. That's a $7 move. You could be there by Thursday. All right. You could be there by Tuesday. You could be there by tomorrow afternoon. I don't know. But if you don't have news, I'm just saying, if there's no news, I'm looking to put in a range. And then again, this 417.76, which put in a slight double bottom there, held it here. All right. This is your 30 or your 23.6 fib from the COVID low. All right. So that's about it, gang. If anybody has any questions or anything, thank you guys for joining us. Qs, they're ripping and running. Keep your eye on the IWM and the Dow. If we have a healthy market, that means they're all going up together. All right, that means they're all going up together. I don't know if somebody's knocking on the door or not. All right, I'm going to go check the door real quick. You guys have a great night. Thank you so much for joining us. Let me see what's going on here. All right, guys, have a great night. Ivy League Trading, youtube.com, 7 a.m. to 4 p.m. Join us tomorrow on the live trading desk. All right, come bring your ideas.